I wish somebody would have told me how important that any and every relationship is, whether it's now or 20 years from now. Every relationship provides some value, I think, whether it's if it doesn't go well, if it's a learning experience, or if it does go well and your friends, colleagues, whatever. I wish I would have thought more like that while I was in school instead of, wait until I was out.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Alec Wilcox here on the show. Alec, welcome.
Thank you. Really excited to be here on the Investing in Iowa show, and excited to be here and join the likes of all the other amazing guests you've had.
I'm glad you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
Yeah, so my name is Alec Wilcox, like Neil said, commercial real estate broker at Cushman Wakefield, Iowa Commercial Advisors here in Des Moines. And specialize mainly in industrial and triple net leased investments with kind of a specialization within industrial, small bay or flex, as some people might call it, and industrial outside storage. And originally from a town called Norfolk, Nebraska.
I'm familiar with it, with the school of Nebraska.
There you go. Often confused with the town of North Platte for those that have had the unfortunate privilege of driving through Nebraska to get to Denver. Not that. So town of 25,000 people, just about 70 miles southwest of Sioux City, a couple hours north of Omaha. Not much around it other than the town itself.
All right. So you grew up there. Talking about that life growing up. Were you on a farm? What did you, or in the city? What was that like? Do you have siblings? Where did you fall?
Yeah. So quote unquote, the city, it's a medium-sized town, but I had two siblings, both younger, a sister, and then a brother, 2 years apart, and then a subsequent three. Yeah, grew up there was not actually born there. I was born at Sioux City, and then my dad was a commercial lender for about 20 years. And so we just kind of followed his job and ended up back in my mom and dad's hometown. And yeah, really enjoyed it. Had some really good connections there, really good friends, and made the move to Des Moines to go to Drake, and just wanted something a little different. I'm sure the ROI on these things are really, really low, but I, like most juniors and seniors in high school, got a Valpak type thing of college flyers. Drake just happened to be one of them. Despite being born in Sioux City, I had never been to Des Moines before. And at the time, I wanted to go to law school. And so they were advertising at the time this, I think what at the time was a fairly new program, this 3-and-3 program, as they called it. You could chop off a year of undergrad and get your law degree. And that's kind of cool. So went and visited. Actually had a terrible visit, which had nothing to do with Drake. The weather was bad. The food was rough that day. And, but they split us up, parents and students. And while I was kind of taken aback by, the bad weather, my tour guide wasn't the greatest, and the food wasn't great that day, they wowed my parents. And my parents didn't push us to do much, but that was one of them that they're like, I think you need to go back there again and try it again. And went back there again and had the complete opposite experience. And we're like, this is where I want to be.
Sometimes parents can be a little wiser. They know more.
Yeah.
They look more.
Yeah.
And know you oftentimes as a teenager better than you know yourself.
Yes. And at 18, it's sometimes hard to admit, but now, looking back, they were totally right.
Yeah. Sorry. So you go to Drake. What'd you study?
Yeah. So like I said, I had the intention of the law route. Took a pre-law class and realized right before the drop date to be able to switch classes, first semester freshman year, that was not for me. So then I went and kind of bounced around and found political science as kind of an easy pivot when I was just transitioning from the law thing. And I actually really enjoyed it. I don't necessarily find myself incredibly fond of like electoral politics, but it's the study of governments and the critical thinking that political science requires you to have was still to this day very helpful in my career in real estate. And then when I was a sophomore, I found an opportunity to go to the business school and ended up graduating with a marketing and political science major. But going back to the pre-law thing, I joke because I did get one good thing out of it. The first day, freshman year, I showed up to class a little early and there was a woman sitting across the room. We started chatting. That woman is now my wife. And so I joke because I did get something out of that. Yep. something really good.
Oh, that's incredible. All right, you graduate, Drake. What do you do?
Yeah. So when I was a junior, like a lot of people that are, in that role, whether it's your junior in high school or junior in college, and you're not certain about what you're going to do, you start to realize that your college days are numbered and you've experienced more college than what you have left to experience. Had a really good relationship with a professor that is still there, and she manages the internship program. Her name is Mary Edrington, saint of a woman. And she was an amazing professor, but she just cared so much about the students there, and still to this day does. She wins all these awards because of it. Well, I walked into her office like kind of desperate, like I have no idea what I'm going to do. I came into Drake thinking I was going to do one thing. That didn't happen. And I had taken a sales class. Drake has a sales program, part of the marketing, and that I really enjoyed. And liked the idea of, how personal sales was. And it's a lot of relationship building and all that. But I really only experienced it in the academic sense. And so she's like, okay, well, you should go job shadow. And to this day, I am a huge proponent of job shadowing. I would say that any high school, college, it could start even earlier. If you don't know for certain what you want to do, and even if you do know for certain what you want to do, go job shadow. It's the best way to experience it. And on the flip side, the employer has no obligation towards you. Right. And so it's a day. And so I did that. Did the insurance thing, did the financial advising thing, I did the residential real estate thing, which was interesting because my mom at the time, and still is, was broker owner of her own agency in Nebraska. Yeah. And so I had kind of experienced that secondhand through her. Didn't feel like that was the path I wanted to go down. And but one of the job shadows was commercial real estate, which being from a town of 25,000, all the agents, they sell homes, they sell random buildings that come up. Yeah, they do everything. And so this idea of a division was totally foreign to me. And she had a former student that also she had a great relationship with, who a lot of people know, Adam Caduce. She was still at R&R. And so we got the connection. Amazing job shadow. In fact, one of your previous guests, Michael Malone, at the time was working there. And and I ended up not only connecting with Adam, but I connected with several other people, several of your guests, Tom Gannon being one of them, and developed some really good relationships right away and went on showings. We were analyzing some lease deals and it was awesome. And like, okay, this is something I want to pursue. There was an internship open between junior, senior year. Thankfully, I was blessed to get it. And then that led to a continuation. And then right when I was about to graduate, I committed to staying on in a marketing role, basically in waiting for a brokerage spot to open up. And thankfully, it opened up right away. And so I was able to kind of step in right away. Yeah. Timing. I'm sure like a lot of people on your show have talked about instances of just good timing, in their lives. And that worked out for me in that way.
So you didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, So I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises. It stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you. You filled a role there at R&R as a broker role.
Yeah.
Working heavily on the lease side of things.
Correct.
Yeah. How long were you there for?
I was there for 3 years.
Okay. Yeah. What did what were some of the, top 2, 3, 4, 5 things that you learned? What were the takeaways there from your experience?
Yeah. So, there's a lot of customer service things you learn just about treating people right, how important relationships are, what I would consider just the basics of sales, but also the thing that R&R gave me one of the many things that I point to, I'm like, oh man, I am better off because of that.
Yeah.
Is R&R, the way they're set up, they have many of the different facets of a commercial real estate deal all in-house. They've got construction management. They've got property management. Even IT, which has become more and more important now. They do the deal analysis in-house. I mean, outside of lending, they've got most of it inside and development. I learned a ton about that I still take. I mean, even just like kind of ballpark, hey, what is an office cost to build out, or some different property management principles, ways to handle deals. Ton of that I am better off today.
Did you work directly? Did you report to Adam?
Yeah.
Okay. Amazing communicator.
Yes. Yeah. And that was another big thing. It's just the ability to communicate good and not so good news sometimes. Sure. I mean, when you're putting deals together, it's off, it's almost always a compromise.
Like life. We don't always all get what we want all the time.
With absolute certainty. Yes. Yeah. We don't get everything we want. So yeah, just excellent communicator. And that's ultimately what I've learned is, man, if you can communicate really well in real estate and, just continue to provide value to people, you're going to be successful in whatever you do.
Yeah. 3 years goes by, your 10-year comes to a close there. What do you do?
Yeah. So there was an opportunity I had discovered, I kind of gotten this inkling just through talking to other people that the commercial real estate world was massive. It was really big. And what I was doing was, really impactful and I enjoyed it, but it was one piece of the big pie. And then I started to talk to some other people that I had good relationships with and started to realize that, well, there's a lot else out. There's a lot else out here, even within brokerage. And there was an opportunity at Cushman Wakefield to join a couple guys that were about to take on the listing of a big portfolio of a flex space, actually, and help them with some lease up while kind of growing into being on the third-party brokerage side, the independent brokerage side, and start building those relationships as I developed a career there.
So the independent brokerage side, so R&R is captive. They've got a huge portfolio. You're working, when one's there, you're working directly on their portfolio. The independent brokerage side is, largely become your own boss. You're out there doing your business how you see fit, brokering properties, leasing properties, whatever that may be.
Yeah.
And you found a wonderful niche in this small bay industrial. Those who don't, you maybe give a little more color, a little more definition to, maybe the layperson who doesn't know what small bay industrial is.
Yeah. So there's a lot of different ways that people describe it. Small bay industrial, flex space, office warehouse in bigger markets. So you see it described that way. Yeah. Small bay industrial is anything that has a base size of less than 10,000 square feet. That's how I describe it. What I find most interesting about it is the diversity and who can occupy said space. And which is why I also, from to stick to the show's theme, the investment side of things, as a hedge on risk, there's just so many different businesses that can occupy this space. And so, economic ups and downs, they influence different industries. And a lot of that space gets occupied by contractors, or you might, a couple days ago, I had a showing at a listing I have, and they do some light manufacturing and distribution of HVAC equipment. On my way over here, right before that, I had a construction meeting with a guy that was a basketball trainer. and he was going to put a little basketball court in there. So there's just so many different businesses that need this kind of space, and the price points are more affordable too. They just do a really the space is full of businesses that are constantly ebbing and flowing.
Highly functional space.
Totally.
You're seeing what percentage inside that space? What percentage of it do you typically see in office versus that warehouse?
Yeah. So it's gotten less and less. There's some examples in this market of properties that were that just straight warehouse, no finish, that got nearly completely finished out, because at one point in time that was the trend. And as has been historically the case, office rents are higher than industrial rents, and now that proportion has shifted big time. So you're seeing 10%. A lot of times, it might get up to that 20
of office.
Yeah. But that's, and it could be zero. So I would say 0 to 20. And outside of a bathroom, there's a lot of businesses that don't need anything.
Are you typically seeing this in a building? Maybe what would be the average size of a building? 10 to 30,000, and then it's broken down from there to what? 2 to 5, 2 to 8, 2 to 10?
Yeah, the average is about 3,000 square foot bays. Oh. Yeah, it's tough to find anything that's less than about 2,000. You get into some 1,500, but those are like condo type.
Tough to make it economical with the devising wall.
Totally, yeah. So 30,000 square foot buildings, anywhere to 100 is about how big those get. But those are some pretty big facilities, and yeah.
Where do you see investors who are buying this type of product or building this type of product? Where do they get it? Those who do it really well, where do they get it right? And those who swing and miss, where do they get it wrong?
Yeah, the ones that do it right are really focusing on the bay sizes they're building, first of all. So like I said, there's a decent range, from 1,500 to 3,000. You can get up to, there's product in this market where you can get bay sizes of 7,500 square feet. The bigger the bay size, the smaller your prospect pool. And if you're building bay sizes, if you can make it economically work at 2,000 square feet, you have a lot of different businesses that can pursue your space. So the smaller the bay size, the better. If you have, and we might get into this, but if you have the ability to enlarge your truck court, or provide something like outside storage, or the opportunity to store extra vehicles, those are the ones that they're doing it right there. The ones that are doing it wrong, they're building, dare I say, too nice. Thing that we're seeing in this market right now, as it's gotten a little slower, is what is getting leased. The market average rent is about $8.15. The stuff that's getting leased is on the lower end of that average, or at average. The higher price stuff is sitting. And the tough part with industrial, just in general, compared to office or even retail, is there's just less characteristics that can be used to differentiate a building in the eyes of the prospect. And so if I just need 3,000 square feet of warehouse space, and as long as the location works for me,
it's a commodity.
It's a commodity.
Therefore, it's a race to the bottom.
Absolutely.
Yeah.
So,
yeah, that's interesting. Have you seen some new construction product out there trying to decommoditize that through things that maybe you mentioned, outside storage, additional parking?
Yeah. So we've got a couple projects that have done that. We do a lot of work up and down Beaver Drive, Johnson. So what I love most about that area is it's one of 3 or 4 pockets left in the city that still allows for that industrial outside storage, and maybe doesn't require the product to be super flashy. But how they're moving to take away the commodity aspect of it is, enlarging those truck courts that might provide for a little bit of outside storage or extra truck parking. We have a condo project right now, which in a way is taking away the commodity aspect from it, because you can buy those bays, and most flex is only available for lease, and it doesn't make a ton of sense for a user to go out and build a 3,000 square foot building. And so these are opportunities to own. And those have been fairly successful in the market. Yeah, some of the other newer things, it's building it, where building it in a way that kind of muddies the water between like industrial and office/retail, meaning that you are attractive to an industrial user that might need some visibility for whatever reason.
An HVAC company with maybe they've got 4 or 5 people in the office taking calls, doing the thing, and then they've got trucks.
Yeah.
So that office component is much higher than 10%.
Yes. And then
given their needs.
And if they need showroom or anything like that,
sure.
that tends to.
Granite comes to mind. I've been in plenty of those.
Yeah, absolutely.
You have a showroom aspect to it. Interesting.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Talk to me about the condos. I have seen a tremendous amount of those over the last, I don't know, call it 7, 8, 10 years at this point, go up. A combination of those being, some of the stuff that comes to mind is kind of your metal shell buildings that have gone up. I've seen a couple of the projects in precast construction, precast concrete, that is, go up that have sold very well. What the type of user drawn to that type of thing? Is there a material difference between somebody who leans in to buy versus lease?
It's interesting because it starts to get the logic that oftentimes drives these users to want to buy versus lease is very similar to the logic that you see a lot of times in the rent versus own a home. It's why am I paying rent when I could be, in my mind, building equity and owning my own real estate? And a lot of people say paying myself. And so that is the initial draw that drives people to do something like that. Also, it's the opportunity to establish a more permanent location. And what I've seen with these condos is when I talk about the diversity of types of users in flex space, it gets even more diverse. I've talked to mainly office users that look at these industrial condos because of their location. And I talked to a real estate company that was interested in it. There's so much synergy in the Des Moines market between, an industry and their vendors that these industrial condos provide kind of an interesting point of attraction of, okay, well, I can have my business here. You can have your business here. Right. We both get to own our own real estate, but we're next to each other and we can have that kind of synergy, which is a little different, than in industrial. It's that's more of an office trait that you see.
Right.
Yeah.
No, you're right. I have seen that type of thing where somebody goes in, they've got a business in the front, and then you talked about bandicators. They've got some sort of sports thing in the back because they've got a friend who does this thing, and somebody's in it, they've got a kid into sports, so they flex and do that type of thing.
Yeah.
Tremendous variety of uses, and the use case is just pretty significant.
Yeah, absolutely.
On a forward-looking basis, how do you see that stacking up and performing against other asset classes?
So we are definitely in a little bit of a slowdown. I would not say we're in I don't even think downturn's the right way to word it, because 18 months ago, most of industrial, or I think I could safely say all of industrial, was experiencing a level of demand that was not normal in a positive way, not normal. Now, it might be a downturn compared to that, but it's more normalized. And so as we go forward, as developers are looking to develop more, they have to focus on, like you said, decommoditizing the asset, because 18 months ago, you could get away with anything and it would lease because the big reason was there was no product, and especially there was no second generation, meaning previously occupied product that's cheaper or has some existing finish that somebody can benefit from. That's not the case anymore. I mean, you've got stuff, we've had product listed that was in the mid 6 range on a base rent, just toward the, like I said, average being 8. This is a lot lower. And we have stuff that's listed in the $13 range. And so if I'm comparing apples to apples and I'm a user that doesn't, as long as the locations are satisfactory to me, I don't need anything flashy. Well, which one am I going to take? And so going forward, I think that in order for new development to continue to take place, there has to be something unique about it, whether it's the fact that it's available for sale, like these condos that are new, or it's in a location that doesn't have a lot of product. You're seeing the city of, for example, in that southeast connector, or the southwest bypass, I-5 bypass. You're seeing the city of West Des Moines open up that area for more flex development. Why that's attractive and why they've been successful down there, there's nothing else down there. And so, or you have to find other ways to decommoditize it. Like, can you build in an area that allows outside storage, or make it different than your competition?
2026, what are you most excited about?
I'm excited about the opportunities within the industrial outside storage space in particular. That area of real estate, that subset of industrial, and I'll back up a little bit. When I say industrial outside storage, I'm referring to an industrial building that sits on an oversized lot. So let's say, for example, it's a 10,000 square foot building on a 4-acre parcel, and it's 2 of those acres are paved or graveled, and you've got equipment sitting out there or what have you. That subset of industrial is scorching hot. And like I said, the industrial markets experience a little bit of a cool down. There's one subset of industrial that is not the case for, and it's industrial outside. And we did quite a bit of work in 2025 in that space, whether it be selling ground that allowed for that outside storage, or leasing existing facilities, selling existing facilities. That product is hard to find. And when you can get your hands on it, it can add a lot of value to the market, just because it's in such high demand, and that is not going away.
There's a number of cities through the country where there are just plats, and it's just ground only. It's not a building with excess ground. I mean, it's 5 acres, it's 10, it's 20 acres just of that IOS, that industrial outside storage.
Yeah.
All right. Do you see that here? Does it exist?
No. I mean, there are some examples, but very few. Compared to 4 years ago, I'm a CCIM, and I took a CCIM class down in Houston, Texas. And I spent some time, I came there a day early and just got in the car and drove. The city of Houston is a good example of a city that zoning is almost like a foreign thing. I mean, you see retail centers next to distribution centers, next to office buildings, next to those storage yards. I mean, it's kind of the Wild West. Des Moines, not so much.
Right.
Our municipalities care a lot about zoning.
Correct.
And it's added a lot of value to our community, but also it creates a shortage of supply, and that can't satisfy the demand for those businesses that utilize that type of space that are doing well, and that, coupled with those types of businesses that are coming into the market, they just don't have a place to go. And so I am encouraging a lot of investors that I talk to, especially ones that might have ground already, and maybe it's zoned for ag, or maybe they're just, they're kind of just sitting on it and don't know what to do with it. Is there an opportunity there to lay down rock, or, and do something that's fairly minimal to get it site ready and rent it out? And if there is, it might be a good way to earn a significantly higher return than whatever you're doing with that land.
The idea being that you're taking your existing building and you're gonna turn that excess ground into a revenue stream.
Yeah.
Don't leave your building. Don't do anything else. Just take that excess ground. I'll liken that for my friends in all the single family space. It's an ADU. It's an additional dwelling unit. You're just going to stick something in the backyard, the side yard.
Yeah.
And you're going to turn it into revenue.
Yeah. There are a lot of opportunities in the Des Moines market where you've got a building owner that does not understand the value that they're sitting on. Yeah. And especially if they're not using it, there are businesses out there that will just lease the ground. And maybe you're a owner of a piece of land in a decent location that's a little bit on the outskirts. And if your zoning allows that, you might consider that. We do quite a bit of work in the Granger and even up in the Perry area. Sure. And what we're finding is that some of these cities that might have at one point in time been considered, a little too far out, that's not the case anymore.
Right.
They're getting sucked in to the demand of the Des Moines Metro. And one of the asset classes that's doing that connecting is industrial, in particular industrial outside storage, because some of these smaller communities just tend to be a little bit more willing to accept it. And it ultimately brings significant business growth to these smaller communities, and it gives the user what they want.
Alex, you ready for the final 3 questions?
Yeah.
If you had one piece of advice for your 20-year-old self, what would it be?
My 20-year-old self. So I went to Drake. I was involved in a fraternity, loved it there. I wish somebody would have told me how important that any and every relationship is, whether it's now or 20 years from now. Every relationship provides some value, I think, whether it's if it doesn't go well, if it's a learning experience, or if it does go well and your friends, colleagues, whatever. I wish I would have thought more like that while I was in school instead of, wait until I was out.
2 books that changed your life.
The kind of a softball, how to win friends and influence people. But one I'm actually reading right now is a book by Bob Knakal and Rod Santomassimo. So for those that don't know, Bob Knakal was regarded as one of the most successful commercial real estate brokers in the world. And Rod Santomassimo is a commercial real estate coach that I subscribe to. And Bob Knakal, and mainly it was him, wrote a book called Selling Buildings. And it is a book directed to brokers and commercial real estate investors or residential real estate investors. So I would highly encourage anybody that's investing in real estate to read it, because there's some principles a lot of principles that he gives that can talk about different ways to analyze a deal and, all those things that can be helpful for not just people like me.
If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know every month to know how your business is running?
I would say are you talking just my brokerage business, or are you talking about the market?
Let's talk about your brokerage. You know what? Dealers, your choice, batter's choice. How about that?
So with the market, I need to understand the vacancy rate. I'll do both. So, and then on my business, I need to understand the opportunities that we have coming in, opportunities that are, the pipeline. The other thing, I need to understand the trends related to which businesses are doing what. When I talk about industrial outside storage, or the things I talked about with small bay industrial, all those trends are just influenced by what businesses want.
Sure.
And so those are the things that I would really need to know.
Yeah. This has been a fantastic conversation. I learned a lot about the industrial space and the small bay. We've not talked about that here in depth on the show, so I appreciate you coming on. I asked lots of questions. What's one question I did not ask that I should have asked?
The one thing that maybe I'll quick touch on is, in the Investing in Iowa show, we talk, because I'm a subscriber of it. And talk a lot about different types of investing and the advantages of those types. And I would encourage people to consider triple net lease investing. And I know that a lot of people can talk about the pros and cons of it. There are a lot of opportunities in Des Moines to invest in commercial real estate, triple net lease. And why I keep saying triple net leased is the amount of expense that it puts away from you, the owner, onto the tenant. In my opinion, it creates a level of stability that might not be offered by other asset types. And I'm saying this as someone who owns a couple duplexes. And so I've seen it and experienced it. And like I said, with the amount of opportunities, even in the small bay industrial or the flex space, even if you just have a piece of ground, think differently about that. Think, instead of just, I'm going to sit on this, maybe I cash rent it for a while and what have you. Think about the other opportunities that might be available to you with that.
Yeah. Fantastic. Alec, I appreciate you taking the time. For those who want to find you, follow you, connect with you, where can they go? What should they do?
Yeah. So you can reach out to me via email, awilcox@iowaca.com, phone number as well. Otherwise, Cushman Wakefield website, very active on LinkedIn, just Alec Wilcox. Facebook, Instagram, wherever. Try to be as available as possible.
Links will all be below in the show notes. Alec, I appreciate your time.
Thank you very much.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.